Hey guys, how's it going? Value Venture Investing here today. So today we're going to do a quick video on Apple's earnings. Thursday here they released Q4 2023. As of Friday here, stock actually is not down that much at all. It's been kind of trading flat this year. We're down a bit. Obviously, we were getting close to 200. So in this video, I'm going to talk about their earnings, and I'm going to talk specifically about something that's not really being talked about much in terms of their earnings. It's kind of being framed in a bad way. So you might not have really known exactly what's going on unless you looked into it a little bit deeper, but we're going to get into that. In terms of this quarter versus the analyst estimates, revenue is $89.49 billion. We had a beat there, a slight beat of annual estimates, or analyst estimates rather. Earnings per share was $1.46 versus $1.39, another beat. And we're looking at about $162.1 billion in cash. Again, we're trying to be net cash neutral with Apple over a long period of time here. iPhone revenue was actually a beat, $43.8 billion. That was actually an all-time September record, but we'll get into that. The expectation was 43.7. iPad was actually a beat, 6.4 billion versus 6.12 billion. Mac was a real blight in their earnings, 7.6 billion. The estimate was 8.76 billion. It's almost $1 billion difference there. Services, and we'll talk more about this. Again, this is the darling of the company here. Beat 22.3. You just can't stop services lately. $22.3 billion in this quarter versus an estimate of 21.36 billion. The analysts can't even get this right. It's growing so fast. Wearables, home and accessories was a miss, a slight miss, 9.3 billion versus 9.4 billion a year ago. Now, this is where it's interesting. Year over year, about 1% total net sales were down, right? 89.4 billion versus 90.14 billion. Reason it's down, of course, is our products revenue here, 67 billion versus 70 billion. Specifically, that's not iPhone, that's other, mainly Mac. We'll get into that. But again, services is growing so fast. We're only at about $19.1 billion a year ago. Now we're at 22.3 billion. So even though services is growing, this products was dropping. We'll get into why, which gave us a less of total net sales. However, Apple's actually technically making more money on the bottom line. And the reason that they're doing that is when we look at the cost of their sales. So products, yes, the cost is going to be less because we sold less, but proportionately speaking, it was less. Services, 6.4 billion versus 5.6 billion. So the total cost of sales was $49 billion versus 52 a year ago. So you look at that difference between the total net sales. So the gross margin was 40 billion versus 38 billion dollars. If you've been following this company for a while, you know why. That's because services are growing, has a higher gross margin. They're around over 70% now, right? So that's why a lot of people's arguments is this should be valued as more of a service company, not so much just an iPhone company, because we have higher gross margin now, even though we've seen some timing issues, and we'll get into that with the product sales. Research and development, we're spending a ton, 7.3 billion versus 6.7 billion a year ago. And nice to see that the SG&A, selling, general, and administrative actually fell, 6.1 billion versus 6.4 billion. So that gave us a higher operating income there of 26.9 billion versus 24.8 billion. So you can see how that translates, which gave us net income of 22.9 billion versus 20.7 billion. So this kind of gets into how do you want to look at the company. I understand that total net sales have fallen, and I believe they've fallen year over year the last several quarters. However, very technically, we're making more money, like which is the whole purpose of business. And in all of the news articles I see, all I see is these top line number, right? When in fact, the company was more profitable. They actually made more money, and they made it more because their services, which is their most profitable, highest gross margin segment of the company, is growing faster, right? I understand the issues that could arise from this, but we'll get into that a bit. So earnings per share diluted were $1.46 versus $1.29 a year ago. Again, huge growth there. However, Apple has been buying back a ton of shares. Like you look at shares used for computing the earnings per share. Diluted is about $15.6 billion versus $16.1 billion a year ago. That's how much they bought back. Now, when we look at net sales by reportable segment here, Americas was the only one. So this is the one that's not so great when we look in terms of this segment. 40 billion versus 39 billion a year ago. Europe fell slightly. Greater China was the one that was concerned about $400 million. But I guess we've seen that news recently, like the news about the Chinese officials not being able to use iPhones. It's all a bunch of geopolitical issues. Apple's pushing more into India, things like that, right? So that's to be expected. Not as bad as I thought. Japan was actually dropped as well by a couple $100 million. And the rest of Asia Pacific was just a slight drop. So then that gives you the total net sales, a drop of about roughly $1 billion over a year ago. But by category, iPhone was 43.8 billion versus 42.6 billion. And this is what I find very interesting. We'll stop here for a second again. We talked about the higher gross margin in services. I recall, and I've talked about this many times before on this channel, that whenever the iPhone sales drop, it's like it's the end of the world. And I kept saying, it's not like Apple's future is not all about the iPhone, right? Yet when you see the iPhone sales drop, it's like the sky is falling. But when the iPhone sales are actually growing, you actually never hear anything about it. You're going to hear about how the other aspects that we're going to talk about here dropped. So I find that kind of interesting. It just seems like it goes back and forth, back and forth. The iPhone can have an all-time record because it's an all-time September record. And it means nothing kind of thing. Mac was a blight here, 7.6 billion versus 11.5 billion a year ago. Now, a lot of that, we'll get into that. They talked about it being just specifically timing issues. There's a lot of pent-up demand because of the pandemic. And then these people bought a ton. So it was a very difficult compare. There's supply chain issues. And I think a little bit in that as well is that we had those massive increases in the chips, the M1, then to the M2 chip. So there really wasn't a lot of room after these big upgrades to upgrade again, because from the M2 chip, from the M1, it wasn't a huge increase. A lot of people didn't upgrade. Now, just the other day, they released their M3, which is actually a very impressive chip. So we're probably going to see that go up higher. And in terms of their guidance, they're indicating that as well. The iPad, 6.4 billion versus 7.1 billion. Likewise, same sort of thing. But again, there hasn't been that much change. Like, for example, I have a 2019 or 2020 iPad. I don't really have much reason to upgrade. Yeah, they're putting extremely fast chips in it, but I can see why there's been some issue on that. But we have difficult compare in there as well. Wearables, home and accessories, 9.3 billion versus 9.6 billion. Again, many similar like that of what we were talking about before. And of course, services, 22.3 billion versus 19.1 billion, which is huge increase again. And it just keeps increasing. That this is a $22 billion every 3 months is insane. Balance sheet, just so you can take a quick look here, there wasn't too much that I found interesting. Likewise, in the statement of cash flows, like I said, I think it's about 162 billion dollars in cash. Now, in terms of the conference call, again, I just want to talk about a couple things here. This iPhone was a September record. Again, I don't think that's getting enough mention. That, like, I don't think that the iPhone 15 was that big of an upgrade. I think that there was a lot of people perhaps that were in the upgrade cycle, in the upgrade mode. But it wasn't a phenomenal upgrade like we might see like a super cycle type thing, yet it was a record. And that kind of leads into the revenue record in India. Apple pushing into India specifically, even with their factories getting away from Foxconn. I think that's huge. India is now the biggest country in terms of population in the world. And I think a lot of people are underestimating this factor right here. Services all-time record. I could beat this to death every time about how this is incredible. In terms of the weakness that we talked about on this video, foreign exchange headwinds were blamed for this. And they talked about this last quarter as well. On a constant currency basis, the revenue actually grew technically year over year. Now, currency does make an impact, of course. So we can't just say that they grew over year, but that's something to keep in mind. Weakness in the iPad, Mac, and wearables. Again, like this is what I talked about before, were blamed on a difficult compare, mainly due to the pent-up demand that I explained earlier. Guidance. Now, this is very interesting. Guidance. Next quarter revenue is to be similar to the year ago quarter. However, this quarter will be shorter, and they say that equates to roughly a 7% impact on the revenue. Yet it's going to be similar. So that shows you that we have some growth because it's a short quarter. yet it's going to be about the same. So I take that as a pretty positive. Of course, the street might take that as maybe a bit of a negative that we're not going to have that much growth next quarter. But next quarter, we're going to be over 100 billion. I think the estimates are about 111 billion dollars in the holiday quarter, especially with the economic times we're having right now. I don't think that's anything to put your nose up against. iPhone revenue to grow year over year, and we see the iPhone doing great as well. So that's incredibly interesting. Although maybe nobody cares about the iPhone anymore. They care about the Mac, iPad, and wearables, because that's what has basically made this quarter bad. Yet nobody cared about it before. Mac is to significantly accelerate, and this is what I talked about before. So that's great because we saw a lot of weakness in that Mac, and I think with the new chips that they just unveiled, that's likely to be the case. iPad wearables to decelerate, mainly due to the product timing. So we're not going to see any increase there. And I think product timing, like I said, with the iPad, if you don't have these big upgrades, yeah. But product timing does have a lot to do with this, right? Services average revenue per week to grow, similar to the September quarter. So again, it is still growing. Incredible. And that's because they have an all-time high, which they say every quarter, active install base. I believe it's around 2 billion active installed products. So yeah, incredible. And of course the AI question is going to come on. It's like the buzzword, right? And they are working on generative AI. That was the big one that, I mean, I'm not sure if a lot of people caught that. They say that AI has a lot to do with what's built into their products right now. Like, for example, the newest iOS update, it will read you your voicemails as your voicemails are coming in. You can delete them right off that. I really love that, by the way. So that's all AI, but in terms of generative AI, they're actually working on that. So, and they're talking about how it's going to become more and more relevant in their products going forward, maybe even with their new product that's coming out next year, the Vision Pro, right? So anyway, in all, I guess it wasn't a great quarter in terms of the total revenue that dropped year over year, but I expected it to be actually much worse with what's going on in the economy right now with high interest rates, rising interest rates, things like that. But there was a lot that I think was missed. And that's why I think it was good for me to put out this video, because I hope a lot of people realize that and realize what's going on, a little bit deeper with the financials of Apple. Anyway, you guys, I'd love to know what you guys think. Leave a comment down below. Don't forget to like and subscribe. I'll see you in the next one.